Hello, everyone, and welcome to the Market Pulse for today is June 5th. Wow, June 5th. I cannot believe it's June 5th already. We are in a green market, but if you're in tech, it doesn't feel very green. So let's talk about that, okay? Let's go here. I've got this little slideshow that I put together. I want to show you. So here we are. This is in our new AI program, which is called Cashflow IQ. It's a full AI system that helps you drive all of your investments in covered calls, which is what we teach. So it's an AI add-on to the elite program and our mastermind group and everything like that. The market timing indicator last week looked like this. It's 4 green lights. This week now with the new AI indicator, it is it's four green lights. You can see them down here. It's a full green. It's been green for 40 days. And so we are green. But I tell you what, it doesn't feel like it. It feels like maybe we're turning. And I kind of warned about this last week. Like, we've got the SpaceX IPO, which we just did a big mastermind presentation talking about the implications of the SpaceX IPO and whether we're being the liquidity for all these people that want to sell. So you've got to watch out. If you're planning on piling into the SpaceX IPO coming out a week from Friday, which is June 12th, you got to be really careful because you might be the sucker that buys it while all these insiders and these people that have been waiting to sell are bailing or figuring out a way to get out. Nonetheless, I just showed everybody how those first few days or weeks in an IPO trade are generally not that favorable for retail. So I'm giving you the warning, be careful. Don't get sucked into the hype. Be careful about it. Put your stop losses in. Be careful of those overnight moves. Don't get greedy, right? Just whatever you can afford, you're going to put in. You're not going to push all the chips in, are you? All right, so that's what we talked about, the SpaceX IPO, and we showed some people what that looks like. Now, we also talked about what's going on in the market. So here's the NASDAQ. You can see 3 days in a row of selling, and today the selling is kind of accelerating. You can see we're up 68% over average daily volume on the selling. That means we're kind of rolling over. Now, do we stop here? I don't know. Maybe, but it sure feels like people are using some of these profits from these big run-ups to fund maybe their SpaceX buys. So Bitcoin's going down, MicroStrategy's going down. A lot of the techs that have gone up are getting sold off now. People are moving to cash, maybe to buy the SpaceX thing. I don't know. Maybe because they're afraid. I don't know. We had an incredible job report today, and I think that's not good for the markets. Why? Because the Fed won't lower rates, which is good for the markets. It will potentially raise rates. So the odds are increasing of a rate raise. And if the rate raise happens, that means there's less liquidity that goes into the market because things get more expensive, right? Not things in general, but money gets more expensive, right? So, housing mortgages get more expensive and everything starts to slow down a little bit. So the market starts to feel it in advance. So there's your QQQ selling off on text today. I'll show you that in a minute. S&P 500 is not so bad, rolling over a little, coming into this support level at around 7,500. Not the end of the world there. Dow Jones, made an all-time high yesterday. Beautiful 900-point move yesterday. Today it's giving a little bit of that back. Not on high volume. So the Dow doesn't look too bad. The New York doesn't look bad either. The only thing about the New York, it hasn't made any recent highs for several months, all-time highs, in other words, while the other indexes have. And so this is a broad index, and you wonder what the heck is going on if they're not making a new high. So to me, that makes me raise an eyebrow. Now, the volatility, the VIX, has come down, and it's up a little bit today, but it's not up too much. So it's kind of a mixed bag. We're still green, but like things are coming apart a little bit, but they can be fixed, right? This has been one of those markets that's been melting up pretty much all year. And that's continuing. We have to play it green because that's what the market says. At least that's how I listen to the market. Apple is still on a tear. It's been running up since down in here. I've been buying it for a while. I have a position. So Apple is now past the buy zone. It's pretty late to buy Apple, but it's making these highs here. Made an all-time high a couple of days ago, and even today it's still up while all the other tech is down. Look at Nvidia. Listen, Nvidia is telling us something. I don't know what it's telling us, but I think it's telling us that it's the most valuable company in the world at $5.3 trillion dollars. But are there problems with this AI trade? And I think the AI trade's in some kind of a bubble. Are we early? Are we late? I don't know, but this feels an awful lot like 1999. And to me, that was a really rough time because everything felt great. The internet was the trade then. And now you're looking at this, the leading company it's gone up to 236, which is not bad. It's up 18% from a breakout spot at 200-ish, but then it gave it back. It's now back at 209. Why is it that this leading AI company that comes out with these amazing products and has all these amazing contracts is not continuing to go higher while the other techs are going higher? Was this too extended? Maybe. Or are there problems in the AI trade? You got to look at it, right? There's two sides to every trade. So I'm not saying I know the answer. I'm saying you got to look at what the buyers think and what the sellers think in every trade, because that's what makes a market. Micron, look at Micron, beautiful hockey stick run up, a bunch of days into an all-time high, and then gap down slightly yesterday on volume, and it's gapping down on volume again today, but not big volume, just coming down a little bit. So Micron is scaring me a little bit. I think it's going to come in and fill this gap and go under 800. We'll see. That seems to be the rollover that it's got going. The momentum seems to be going to the downside. So be careful if you're in Micron or if you're in any of these techs. AMD, same kind of thing, down, but it's not down on big volume. So I don't think the weakness in AMD is anything to be that concerned about, in my opinion, because it's lower volume. Bloom Energy, this is an AI trade. However you strike it, energy is the big trade, and Bloom Energy was powering these data centers. And you can see all these little red candles. There's only 2 out of like 10 red candles. That's telling you things are rolling over a little bit. It's been an amazing stock. I mean, it's up 67% in a few weeks, and it went even a little bit higher than that. So it's giving some of that back. Does that put this gap in play? I think so. Does that put the 200-day moving average, the 50-day moving average in play? I think so. So this stock looks like it wants to come down a little bit more under that 250, maybe to the 240 level, fill the gap. SanDisk, gap down today off of yesterday, low volume. This is not the end of the world. Look, this volume is not very high. So it's giving back some of the profits that a bunch of these people from 691 all the way up to 1700 made. That's probably okay. I don't think I'd be shorting that. We were just having a shorting discussion about that. GE Aerospace, though, beautiful first stage double bottom base. 319.14 is the buy point. And this stock seems like it wants to go up. It's up 366 right now on a day where a lot of things are down. It's up and it's been up. Look at this big, how many days in a row that it was up and then only 2 days down. The 2 days down were on low volume. This is all good stuff, guys. So if you're looking for something to put on your watch list, this might be that one. The gold, I had a position in gold, finally had to get rid of it. It met my circuit breaker. It's now below the 200-day moving average. It's below $400. This stock, couldn't hold this 399. You can see that's a support level. Couldn't really hold it. Maybe it'll hold it by the end of the day, but there's a lot of hope, and hope is not a strategy in the stock market. So you got to have your circuit breakers, and mine was at 400, and I got out. Silver is even worse. Silver gap down today. Silver's down on higher volume. That stock, the silver ETF, looks like it wants to go minimum to the 60.37 to me, and then some of this in here might get taken out. Strategy was all the way up to 197. Look where the low was this year, 104, went up to 197. That's a 90% increase for the year, but unfortunately, sadly, it's given back $70 of that, $80. That's a big decline in the stock for the year, unfortunately. So MicroStrategy is in a little bit of trouble. Bitcoin's in a little bit of trouble. Could be that SpaceX trade that people are selling off assets to buy SpaceX next Friday, on June 12th. Carvana, by the way, I went short on Carvana yesterday. It's showing a pattern that I wrote in my new short selling book, The Short Seller's Edge. And I might have jumped the gun a little bit on the pattern, but I don't like their business model. I don't like the chart. So for me, the short side is the way to play this stock. We'll see what happens. We'll leave it right there. This is a green market, and you have to kind of play it as a green market. But at the end of the day, there are some chinks in the armor in this market, and I hope you're not getting caught in them. We had a company called Broadcom that reported earnings. I think it was Wednesday night. Thursday morning, the stock was down $15, and I did a video on this yesterday. And then the stock is down another 6%. It's below $400 or something. So the stock went from 470 to under $400 in 2 days. That could be the canary in the coal mine on the tech part of this market. The tech melted up, or whatever you want to call that, and now it's giving it back a bit. So be careful of that. I mean, there's a lot of weekend potential trading that happens on Friday. People want to hold risk over the weekend. So that could be some of it. But, you know, if the selling starts to accelerate, you're going to feel it. And so there's times to get out of the market and protect your capital. And I want you to do that if you possibly can, because I don't like to see anybody losing any money. How about that? Listen, thanks for joining me on the Market Pulse. I hope these are helpful every week. I try to quickly throw a bunch of stuff at you. If you see enough charts in your life, you're going to start to figure out the patterns and you'll start to recognize them. And that's my goal, is to educate and hope that you can learn something so that you can apply it to your life and make your life a little bit better. That's all I do. Have a great weekend, everybody, and I'll see you next week on the Market Pulse.